Hi folks, welcome back. This is the place where we track one of the most consistent patterns in the market, the EURUSD 4-hour CRT setup. Every day the market leaves clues, liquidity get taken, structure shift, and the 4-hour candle reveals the high probability timing. On this channel we focus on pure price action, clean structure, and disciplined execution. No indicator, no noise, just the chart. If you want to understand how the 4-hour CRT form, where liquidity sits, and how smart money moves, you are in the right place. This setup have a very good thing is that it's formed every day on EURUSD. So before I dip into the video, make sure you subscribe my YouTube channel and click the bell icon. First thing you have to do, you should keep your chart on New York time frame UTC -5. It's because the daylight saving time is going on. In March month it will be changed to UTC -4. Okay, so keep always New York, doesn't matter -5 or -4. Okay, so it will align your time with my chart time. Okay, second thing, your chart should be become first at 4-hour time frame and in EURUSD. So theoretically, once you put 4-hour and UTC -5, then you will see here the all timing is as per the New York Eastern Standard Time. Okay, so each candle have a 4-hour price action, so you will see downside that time is coming. So this is 17, 21, 1, 5, 9, 13. Okay, so this is the 21. Every day what you have to do, wait for the 4-hour 21 PM candle to be closed with wick. Okay, you have to mark high and the low. I will give you also some secret sauce later in this video. For this strategy, it will increase your win rate as well. Once the 1-hour candle open, it should purge the one side liquidity, and then you will target the opposite side. Okay, on smaller time frame can be a 5-minute, it can be a 3-minute, it can be a 1-minute. Okay, as per your style of the trading, you are scalper or a day trader. The secret sauce which I will tell you, it will eliminate the fake moves like Judah swings, okay, the fake market structure shift, and it will be help you to avoid the maximum losses on this setup. Okay, these setups forms every day on EURUSD. You can backtest, and if you don't have any trading view membership, don't want to purchase that any trading view membership, then I already make video on it how you can get access the free 1-month trading view access without paying any penny. The link you will find in this channel. Make sure you watch that one as well. Okay, so now let's go to the practical. As our rules, UTC -5, chart in 4-hour EURUSD. We have to mark the 21 PM candle high and low. Okay, once you mark it, you will shift into the lower time frame. These from here, that is the 21 PM candle. From here, the 1 AM candle open 4-hour. So once it happen, it start giving you reaction. If you go to 1-minute time frame, maybe you will find here the market structure shift, which is Judah swing. Here also Judah swing. But what is the secret sauce? So the secret sauce, you have to have some sort of PD raise on higher time frame. Okay, why this is most important? Now let's understand this with the deep understanding. Here what we did, we take the liquidity, we tap in fair value gap, we did the market structure shift, price come to the below of 50%, right? If you see our 4-hour candle, if I let me delete this one, our 4-hour candle just tap on the 0.5 with an BC, okay, and we are in discount, okay, then we are like, this is the secret sauce, this is the dealing range, high and low of the dealing range. In that dealing range we tap on our discount area, okay. So now what we will see, we will see the internal range liquidity, okay. So this is the 4-hour fair value gap, this is the midpoint of our dealing range on higher time frame, right? We have internal liquidity, except then this 4-hour liquidity. So this is the secret sauce, okay. You will see how the price is reacted algorithmically, okay. So what we have here, we took another liquidity, we do the market structure shift here, but where is the change in the state of delivery? Here, okay. Inversion fair value gap, this we have BPR, and we have a fair value gap. So what happened here? Let's take the liquidity, change in the state of delivery, and later on the market structure shift. So now we have, before we tap on the higher time frame dealing range midpoint, now we have a new dealing range from this low to that high, okay. If you see here, where is our recent swing point is here, and also the liquidity level which need to be targeted, okay. So now anything below on this dealing range is below 50% is a discount, anything above 50% is a premium, okay. So once it reach to the below 50%, okay, you can enter directly from here. Once this change in state of delivery happen, okay, you put your stop loss downside and wait for the market purge the high, okay. But how to read a price with perfectly, so you can either in that small time frame, in that one candle, 4-hour candle, you can easily take one simple trade with very minimum risk and very high reward, okay. So here, once price come below the 50%, we have this fair value gap. The same concept which we did in 4-hour, it will be happen here. If you see, price fill that 4-hour fair value gap, okay. Once it leave that fair value gap with the above and closing above of that 50%, this candle, you see any candle retrace, it failed to come the midpoint of that fair value gap. See the consequent approachment, this candle touch. I want to show you here something else also. The order block. You see the respect of the consequent approachment of the order block. This is algorithmic signatures. You understand it now? It's touch and rect to the here, liquidity taken, okay. And then later on there is a news, and this is the Friday, and you know the Friday is how is that choppy because the closing time, and many said the institutions have booked their profits or blah blah, but you see how price react on that. And later on, once the news happen, news low has been taken, same price tap on the higher time frame fair value gap, and again on this inversion. This is the, if you know the macros, inversed and the liquidity taken out. Okay. Also, if you focus, this is the ICT market maker buy model. Consolidation, original, accumulation, reaccumulation, sell side taken, change in the state of delivery, OTE, and then boom. And this setup happen almost every day. Every day. This is the day I told you. 21, 1 hour open, below, same fair value gap, 25 level. We have 3 cardinal levels here, midpoint, 25 and 75, right? Just tap on there, give you reaction, hit it. Here is the candle 21, CRT perfect, down, SMT with GBP USD. Here 21, candle open, below and take high. Continuation, here also 21, we have midpoint of that candle we got. Okay, so once you start reading the price, you will see different. It's happen almost every day on this chart, and if you align with the secret sauce of higher time frame, it will be really good for you. These are 21, market open, take the liquidity, downside. 21, liquidity taken, downside. Okay, here is 21, price open, upside with fair value gap to the downside. Every day I give you a roadmap. Now is your work is to be backtest. Okay, I hope you learned something from this video, and I will give you the link of some good prop firms, instant funding, some good brokers in the link of that brokers and prop firms in the description. Make sure you join from there. Until next time, be safe.